Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, a long-term macro trend. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. We also do have the premium list. You can find that at intothecryptoverse.com. Let's go ahead and jump in. So, we've shown this before, but I thought it would be a nice time to update it. Essentially, what we're interested in is looking at the relationship between two long-term moving averages. So specifically, I'm referring to the 100-week SMA and the 200-week SMA. All right, and you can note that before this mania phase occurred over here, we actually came relatively close from the 100-week crossing below the 200-week, but in fact they did not cross. We also came close again here, but they did not cross, and so far we had a little move. Not the same degree as this one, not even close. Now, I would say, we talk about lengthening cycles and diminishing returns. 64K, if it were the top, that would of course be diminishing returns, but it would actually be extremely diminishing because then we would only be looking at a cycle peak from 20K to 64K. That's just over 3x. That's not nearly as significant as what we've seen in the past. For instance, when we last cycle, we saw it go from around 1100 or so, 1200, all the way up to 20,000. So you're talking about a 20x from peak to peak. But one of the interesting things when we look at this is to suggest that we might still have room to grow before we ultimately come crashing back down to have like an 85% correction or something. And one of the ways we might be able to understand that is to look at this metric, which is basically dividing the 100-week SMA by the 200-week simple moving average. If we look at this trend, it's very dubious indeed, but we can see there's sort of a long-term macro trend here, okay, with regards to the 100-week SMA and the 200-week SMA if you take the moving average division. And they more or less are converging. So what it shows is that macro level volatility is in fact decreasing. Now, some people will have you believe that volatility is as high as it ever has been, but it's just simply not true. I mean, Bitcoin, if we had kept pace with, say, prior cycles, let's say we kept pace with cycle 2, Bitcoin would have already gone to $2 million and would have already come crashing back down, but it didn't do that, right? So we know that macro volatility is decreasing. Even if it feels like volatility is still really high, it's still nothing compared to what we experienced cycles ago. But if we look at this chart, it's not the most intuitive because you might expect that the valleys would correspond to the bottoms and the tops would correspond to the peaks. But in fact, as we know, moving averages are lagging indicators. So you might almost look closer to, say, changes in concavity or the first derivative or something. But even then, it still doesn't come to predict the exact top or the exact bottom, and I'll show you what I mean. So if we look at this chart, we can say, well, if we draw a line here at the bottom of this, of where we shifted from going down to going up, we had already shifted from being concave down to concave up at this point, okay? But this is where it shifted, and if we look at the chart to see what was Bitcoin doing, October of 2016, let's draw the same line on the price chart. Okay, so we're just going to draw the same line here. Sorry, we'll just draw the same line right here. Okay, that's more or less where it would line up. And you can see that, I mean, Bitcoin had already entered in its uptrend. We were already holding the bull market support band as support at that time. I can overlay that as well so that you guys can see it. Remember, don't take my word for it. Always verify. And okay, so here it is. So there's the bull market support band. You can see we were already holding support before we started trending up here. And what you'll notice though is that the change in concavity in early, or say like in late 2015, early 2016 was fairly close to calling the beginning of the uptrend. Now, it did not call the bottom. As we know, the bottom was over here. Okay, it was over here. But it at least called the change in momentum. Okay, right here. And if we go look at what happened at that time, if we zoom in, we can in fact see that it corresponded to right before Bitcoin held the 20-week moving average. So it was a sort of a signal that in the long term, things were slowly shifting. And if you think back to calculus that you probably didn't pay attention in, if you take the first derivative of this chart, you will see it'll make more sense in terms of these changes in concavity. Actually, the second derivative would actually be ideal. But you'll start to understand more about these changes in concavity and whatnot, and going from concave down to concave up. We saw this happen back in late 2015. Now it hit a bottom here where we first held the 20-week. All right. Now the next interesting thing to look at, okay, if we scroll over, would be not the top, but the change in concavity, right? The change in concavity. If you don't know what I mean, this is concave down, where it's changing from concave up to concave up. This is concave up, okay? And it changes at these inflection points, all right? So we're looking at the slope. So we go from concave down to concave up. So over here we were concave down, over here we were concave up, concave down, concave up, etc., etc., etc. So you guys get the idea, I think. Okay? So the inflection point is where we more or less held the 20-week. The bottom, the inflection point is where we more or less held the 20-week. The bottom shows where this parabolic move really started to take off. All right, that's what it shows. This is all last cycle. We haven't gotten to this cycle yet. We're getting there. The change in inflection, the inflection point, the change in concavity occurred here, somewhere in this area. And maybe in a future video, I'll just show the time derivatives on here. And you can see that while it didn't predict the peak, it did not predict the peak, the change in concavity did not predict the peak. What it did do is it showed that the momentum was slowly shifting, right? It's not that it shifted immediately on these long-term moving averages, but it started to slowly shift, and by the time we were in late December, we were coming up close to the market cycle top, and then what happened? We rolled over. Okay, we rolled over, and we went into a long bear market accumulation phase. And that happened more or less once we actually started to roll over. If you look here, once the slope started to decrease here, that's when the bear market started. Okay? So make sure you note that. Right here, we started to roll over. It was indicative of, in fact, the bear market. We don't really have enough data to go beyond this because you need the 200-week moving average to be included. But you can also see that when it started to roll over here, if you can imagine, it would have looked something like this. When it started to roll over up here, that's when the bear market started. All right? Isn't this fun? So, we continue along. What happened at the top, right? Well, that was actually the bottom. This is the bottom. Right here. More or less, that was the bottom. Okay? They're not going to always work out like that, but it was more or less the bottom. And you could go over here and say, well, it's close to the bottom, right? It's close to the bottom. Let's keep on moving, because I know you guys are having a whole lot of fun with this calculus and whatnot, so let's keep on moving. So what happened next? Well, we had another inflection point. Change in concavity, because we were concave down, right? We were concave down right here. We turned to concave up. The end of 2019 is when we turned from concave down to concave up. That's when we had the inflection point. We became concave up. And then what happened? Well, what happened at the bottom? That was what preceded the parabolic move. Right? It's what preceded the parabolic move. But I told you guys back in April and May that a lot of people back then, they were calling for $300,000 Bitcoin already. Like, we should have already been there, right? That's what they were calling for. I mean, a lot of them were calling for, 100K, 200K by the summer and whatnot, 300K by September, by the end of the year. What did we say? No. The evidence suggests that we are too far extended, right? We're too far extended in the short term, and that it would be for the health of the market if we, at the very least, have a summer lull. 3 to 6 months. We got through the 3 months. That was the summer. The only concern I have right now is if we hold the 20-week. If we hold the 20-week, we don't need another 3-month low. If we don't hold it, my speculation is just 3 more months and then we're off to the races. All right, that's what I would think. The bottom here, right when we took off. Okay, this is when we took off. Is it not? Let's draw the line. Okay, so I'm just going to overlay it as best as I can. That's where we took off. And this occurred right before the pandemic drop. Okay, so it's sort of like one of those black swan events, but it more or less corresponded to within a few months of getting back above the 20 weeks. So what it shows, it does not show the bottom, does not show the top necessarily. It shows long-term shifts in momentum. That's what it shows. And while you could argue that we ultimately had a capitulation event before we actually took off, it's not showing that. Like, it's showing the long-term shift in momentum from being concave down to being concave up. Why do we want to be concave up? Well, what it means is that there's more separation between the 100-week and 200-week simple moving averages. And if there's more separation between them, then it implies, especially if Bitcoin's going up like that, it implies that the price must be going up. You see the separation from the 100-week and 200-week, they only separate like this in this market when Bitcoin's price is going parabolic, right? That's what causes the separation, because the 100-week reacts quicker than the 200-week, because the 200-week takes into account another 100 weeks of data. And if you go back 4 years for Bitcoin at any time, the price is generally going to be much lower than it was at the present time if you have to go back 4 years, or an extra 2 years, in fact, on average. Now, from here, what happened? Well, this looks kind of weird, doesn't it? We haven't made it to the top, and you could have argued that we were starting to have an inflection point that was going to take us back down. And we still could, but what does it show? Well, it shows it isn't rolling over yet. It's not, right? It's not rolling over yet. We haven't seen that point in the market where it really starts to roll over. The slope was moving up, and then it started to level off. And if this cycle had been like the 2017 cycle, the 2016, 2017 cycle, once the slope started to level off, that was all she wrote, right? That was all she wrote. But that's not what's happened. We started to level off, and then this happens, right? We all of a sudden got another kick higher. So clearly there are some differences, right? We can't say that there are no differences. A lot of people point to prior cycles and say that, well, because we had all these things that happened, and this is just a dead cat bounce. And look, they could be right, okay? To completely dismiss the idea that 64K was the top is probably a little bit foolish. But to say that we have to behave in the exact same way that we have in prior cycles is probably a little bit, it's somewhat nonsensical, right? It's somewhat nonsensical because you can't assume that things have to play out exactly the same way every single time. And we could be emulating 2013 rather than 2017, okay? And I would say that I think the current cycle is a stretched out version of 2013. So I don't think that the cycle has to end in a couple of months. I think we could still have a ways to go. And if you look at this chart, maybe we're starting to begin another leg. Now, it might take a little bit of more time, depends on if we hold the 20-week or not. But if we hold the 20-week and we're putting in new all-time highs in a month or two, then, here the next leg comes, right? Here we go. So let's look at this chart and say, well, there's some differences. And if we hold this macro trend line, it still seems like the 100-week could get further extended from the 200-week than it currently is. And maybe it would reach that, sometime way out here, right? This one reached it back in say, November of 2018. That was where it actually started to go back down. But the rollover, right? The rollover occurred starting in December, right, of 2017. This is when it started to roll over. And right now, we are slightly starting to head back up rather than have like a rollover and come back down. Looks like we're starting to head back up a little bit. So if this continues to, say, move along like this, and then it continues to just slowly go like this, and then eventually, let's suppose that it starts to roll over. If that's the case, if we see something like that, then it could be indicative that we are getting, in fact, close to a market cycle top the minute you see it start to roll back over again. And it could show that once it really starts to flatten out, like this, and if it starts to hit this like sort of peak on this chart, that was actually what preceded the final capitulation. In fact, you might look at this chart and say, well, shouldn't this predict the peak? It actually more so predicts when the final fallout is going to happen in the market, right? When it actually hits the top here. So if we were to look at this chart and say, I mean, it's hard to know what'll happen. If you had asked me, 12 months ago, I certainly would not have said that it's going to do something that looks like this. But imagine we slowly go up or something like this, and then we start to roll over like this. By the time we hit that peak or whatever it occurs, that might actually be the final capitulation event. And then the following area, like when it comes back down, that would sort of be reaccumulation before what the next move might be. Okay, hopefully that makes sense. I don't know if I'm doing the best job of explaining it, but I'm just trying to explain what I'm talking about. If Bitcoin had gone according to what the other guys were saying, 300K Bitcoin by the end of the year, by September and whatnot, then we would have seen this moving average already come up, and we probably would have seen it roll over now. And in fact, September could have been the peak if we had held the 20 week and we had just continued to go, right? And we had gone to say $200,000 or something by the current day, then we would likely be looking at something that looks like this. And the rollover would probably already be occurring. And it would, more than likely mean that we're going to be heading back down and that we're going to be in a new accumulation phase, and that maybe by early 2022 or something, we're at the market cycle bottom. Okay, because imagine if September had been the market cycle peak. And therefore, following that, you probably have October, November, December, January, February, March, April, where we're basically finding a bottom, and then it would suggest that maybe April, May of 2022 would be that final capitulation event, and then you would just have reaccumulation going into the next halving. But that's not what happened, right? That's not what happened. We did not continue that trend, okay? We did not continue that trend. We leveled off, and now we are slowly starting to move back up, okay? So, it's hard to know at the exact rate at which we will head back up, but if it were to just go up something like the current slope, then it would take us, till maybe Q2 of 2022. But if we start to roll over, we might see a peak over here, and then if we roll over like this this rollover here occurred for about a year. So imagine that same thing happens again, then it could indicate, a market cycle bottom sometime in early 2023 if it starts to roll over by Q2 of 2022 or something. So this is something that we want to keep an eye on. More or less, we just go from concave down to concave up to concave down to concave up. Eventually, we'll be concave down. Once we are coming back down and we're over here, we're probably going to be in a really boring phase of the market. It's probably going to be long reaccumulation, all right? And typically, when that happens, what we'll likely see a lot of people become uninterested in crypto. They might stop buying it. Whenever that occurs, that'll be the time to accumulate. Yeah, you know what I mean? Those prices could be higher than the prices today, but you got to take what you get when you can get it. Imagine Bitcoin goes to, let's say, 150K within 12 months or something. Let's say it goes to 150K or something, and then it drops back down to 50K. That would be the time to accumulate. Right now it's at $44,000 too, but I'm just saying in the future, if the market cycle were to in fact play out like that and we get some market cycle peak off in a bit, then after that market cycle peak, that's when you accumulate once it's had the final capitulations. Now, some people would say 64K was the peak, right? Some people would say, well, diminishing returns was right, but lengthening cycles was wrong. And I've said before, they're not mutually exclusive. You can have one without the other. I would prefer to have lengthening cycles than diminishing returns, but if I had to pick, I'd say they're probably both going to be right. Right now, the only thing we can say is if 64K is the top, then we know diminishing returns was right, but lengthening cycles was wrong. Okay, so if 64K were the peak, then if we get some major capitulation like in 5 months or something, that will be the time to accumulate. Okay, but hopefully we actually hold the 20-week, and there is some evidence on this chart to suggest that we should still have some room to move higher. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the premium list. You can find a link to that in the description below, intothecryptoverse.com. You will get access to weekly reports and videos, the Telegram alerts channel, the risk dashboard, the Into the Cryptoverse app, and more, so make sure you guys check it out. Definitely subscribe, click the bell icon to turn on notifications, and I will see you next time. Bye.